Today, Quibi calls it quits after only 6 months. Plus, we explain why Wingstop is one of 2020's hottest restaurant stocks. I'm MacKenzie Sigalos, and this is CNBC After Hours. Let's get a check on Thursday's market action. Stocks rose across the board, again because investors were optimistic on the chances that Democrats, the White House, and Republicans could come to an agreement on the next round of fiscal stimulus. House Speaker Nancy Pelosi said on Thursday that they were, quote, just about there on the deal. However, she did caution that it could take a while for Congress to actually write and vote on the relief package. Oh, and there's also a presidential election coming up, if you haven't heard, in about 12 days. Bank stocks also helped push the market higher, with JP Morgan and Morgan Stanley both popping 3%. And in non-stock market news, short-form video streaming company Quibi is no more, and after only 6 months. Here's what we know. Despite the coronavirus pandemic and its stay-at-home orders causing the streaming wars to heat up big time, Quibi's business model was meant for on-the-go viewing. You could watch premium short-form videos that turn vertical or horizontal depending on how you hold your phone. Well, not much of America has been on the go lately, not unless you're an essential worker. There also isn't a huge shortage of vertical video available on people's phones. I mean, TikTok is a thing, and it's vertical video. Jeffrey Katzenberg and Meg Whitten came on CNBC to talk about the many failings of Quibi.
I think that the environment that we found ourselves in, as you've heard us say many times, this was designed for on the go, in between, at a moment in time in which no one was on the go. They're still not on the go. And so our product market fit was wrong. I mean, somewhere between the idea being less than perfect, which we own, and the environment we found ourselves in is where the fail has come.
Quibi cost $4.99 per month, and the company originally projected that it would have more than 7 million subscribers after its first year. But as of a few weeks ago, it only had about 500,000. The company raised about $1.75 billion in funding before launching. Investors included Disney, CNBC parent company Comcast, and AT&T. Whitman told CNBC the company still has about $350 million in cash, but expects to return more to investors.
We changed our marketing. We changed the app around many different times. But it was clear that for whatever reason, this was not going to be as successful as Jeffrey and I had hoped. And so we took stock of where we were, and we said the best thing to do, the honorable thing to do, is to return money to shareholders.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
Depending on how the election turns out, some people may calculate that they could get a better deal in January. So we'll see. Look, I'm cautiously optimistic, but we've already seen this thing take a lot of twists and turns. It's really unfortunate, especially for small businesses that are getting crushed out there and the jobs that are going to be lost because of this.
We will get more fiscal support. It's a matter of when, not if. And beyond fiscal support, I think we're also in for fiscal stimulus over the next few years. There's just no appetite for fiscal austerity anywhere in Capitol Hill, honestly, anywhere in the world.
But the facts support this. The facts are that it is a very safe environment. And with all of the filtering techniques with air, wearing masks, facing forward, is a very healthy environment. Now the science supports that.
What we're expecting to see is, as the Northern Hemisphere goes into the winter, that we will see an increased number of local lockdowns or local restrictions to try and contain the number of cases, and obviously particularly try and contain the hospitalization so that the health systems don't get overwhelmed. So I think we had always anticipated that the winter would be the toughest season, and we're ready for that.
Our delivery business is now over $1 billion. Our order ahead business is over $1 billion. And our total digital business as a result is well over $2 billion. So obviously it won't continue to grow at 200% growth rate, but I definitely believe it's going to continue to be a growth engine for our company.
Okay, so we just heard from Chipotle's CEO, one day after the company reported its third quarter results. Chipotle stock has been taking a beating since then. Yes, the company did better than Wall Street was expecting, and yes, sales are up double digits, with digital sales more than tripling during the quarter. But here's the big problem for Chipotle. Delivery, well, it's expensive, and people still, for the most part, just don't want to eat inside restaurants. So even though sales are way up, profits are being weighed down by the huge cost of delivery. Third-party delivery platforms like Grubhub or Uber Eats can charge pretty hefty commission fees. We're talking up to 30% per order. Now, all of that said, the good news for Chipotle is that even with the hit to its share price in the last 24 hours, they're still the top performing restaurant stock so far in 2020. Coming in just behind them is Wingstop. The two companies have actually been going back and forth for that top spot all year. Take a look at this chart. Wingstop shares have dropped in recent weeks, allowing Chipotle to take the lead. But it shows just how neck and neck it's been for most of the pandemic. Wingstop is specialized in the takeout and delivery game for a while now, and its numbers have been pretty stellar this year. The chicken chain has actually brought on about 6,000 new employees in the U.S. since the start of the outbreak. So why is Wingstop crushing almost every other restaurant stock in 2020? And are they poised to take that #1 spot anytime soon? Nicole Miller Regan of Piper Sandler is here to explain.
There's a couple of things that are special about Wingstop that others are trying to mimic but are going to have a difficult time getting there. The vast majority of their sales were off-premise, more than 2/3. And again, that could have been going in to take the meal to go. But the one piece that Wingstop has that their peers don't have is the direct relationship with the customer. When the customer goes to search for something for lunch or dinner, they're searching on a website. They're not searching on an app. And when you search on the website, they show up. And you can actually go to their website and transact an order on their website, which if you think about fulfillment for many other brands, you have to go to the marketplace or you have to go to their app. And so it's a very undervalued advantage that they have in the marketplace with that direct relationship with the customer. One of the things that Wingstop has an advantage is brands that they don't cost too much, you can get in and out of very quickly, and something you're just not going to make at home. And so we might have Taco Tuesday at home, we might be doing burgers on the grill, but the chicken with all the customization of flavor profile is just something that we're not, that consumers broadly aren't making at home. I mean, every transaction almost in restaurants technically is off premise. So when we talk about things being closed, listen, those doors aren't technically closed. If you wanted to pop in and do a rapid pickup of your food, you could. But the #1 preferred method is a drive-through. And for those that don't have a drive-through, then delivery is a fantastic option. But at the end of the day, it's those that had those means to connect with the consumer there before COVID. And so brands that are catching up are being reactive. Brands like Wingstop are proactive. They had the vast majority of their sales going off premise. They already had a digital relationship with their customers, and they've only strengthened that. So it's so much easier for the customer to find them, trust them, and transact. The work from home trend, we don't know how long it is here to stay, but it's here now. And so brands like Wingstop that have a disproportionate amount of stores in suburban and even rural areas are really outperforming. We see double-digit growth in all brands, public and private, that are in suburban and especially rural areas. They're really holding up much better than the central business districts.
Okay, time for today's numbers round. First up is 787,000. Initial jobless claims, which is just finance speak for the number of new people applying for unemployment benefits, came in at 787,000. That's the lowest they've been since the pandemic started in March, which could be a good sign for the U.S. economy. But it's important to note that one reason for this decline is that some workers have just exhausted their regular unemployment benefits. So instead, they've had to move on to emergency compensation from the Pandemic Unemployment Assistance Program, meaning that they no longer count toward that headline figure. And finally, 426,000. Congresswoman Alexandria Ocasio-Cortez pulled in roughly 426,000 viewers during her Twitch livestream of strategy game Among Us. That's according to metric site Twitch Tracker. AOC hopped online to encourage her viewers to vote in the November 3rd election, and fellow Congresswoman Ilhan Omar of Minnesota joined in. Notably, AOC's livestream was the second most popular stream of the week and ranks among the top 20 most watched Twitch streams of all time. That's it for After Hours, but before we go, here's one more thing to keep an eye on. The final debate between President Donald Trump and Democratic nominee Joe Biden hits airwaves at 9 p.m. tonight. We are less than 2 weeks until Election Day, so it's a big moment. The last time the two presidential candidates appear together before voters head to the polls. And it's the first debate to feature a mute button. NBC News' Kristen Welker will be moderating. Get the latest news from the debate in real time by going to CNBC.com and downloading the CNBC app. For the rest of October, we'll be right here in our home office every Tuesday and Thursday with a new edition of After Hours, so be sure to catch us next week.